Thank you all. So Guardian wrote that more than 90% of rainforest carbon offsets are worthless. There's been a lot of recent skepticism of the effectiveness of carbon markets. Mikkel, you're the CEO of Climate Impact X, a global marketplace and exchange for high-quality trusted carbon credits. How do you assure your buyers that carbon credits can still be an effective solution on their decarbonization journey?
Thank you, Ashley. Perhaps a couple of words first to contextualize what I'm about to say. First of all, we shouldn't forget that it's not just nature-based solution that's come under attack. It's essentially all types of carbon credits. So whether it's soil or cook stoves or alternative wetting and drying, all of these things have come under criticism. And I say this because it's so easy to erode trust. It can take 20 years to build it. It can take 5 minutes in a wrong news article to destroy it. And so that leads me to my next point, which is to get this market really going, I think we need to instill trust in 4 areas. And that's how we built CIX. Trust in the quality, which is what we're talking about right now. Trust in the use of these types of products. We have to also provide trust in the price. Why should we be paying $2 for something and $800 for something else? And then trust in the execution. And so to your point, and focusing on the first pillar, we made a commitment from the very beginning that we do care about quality for 2 reasons. One is because what we want to put on our platform, we want to make sure has impact, but also because I think a large part of this challenge that we're dealing with is an educational one. So for us to be able to explain an imperfect product, because they're all imperfect, we need to be able to understand the product. So we have a fairly rigorous process that starts with the right choice of projects and standards, our own team that does the assessment. We calibrate that with rating agencies, and we end up with an advisory panel. Now, the process is perhaps not as important as what we're trying to achieve with this. It is really trying to move forward a market so that the buyers can feel confidence that what they're buying has real impact. Because the real benefit of what we can do as an intermediary is to try and channel the money to where the real action is, either from investment from GenZero or project developers like Dasono. That's ultimately our biggest purpose here.
So that's a great point, Mikkel. You mentioned that understanding the product actually is essential in terms of helping to create confidence. Max, you're the CEO for Woodwell Climate Research, and as the scientist on this panel, help us understand how can science help improve carbon markets integrity, and maybe give us a specific example.
Yeah, thank you for that, Ashley. Thank you, GenZero, for this opportunity. It's really been fantastic to be here for the past few days at Ecosperity and the past 2 days in this conference. I've learned a lot, and hopefully I can share something. So I want to focus on the quality question that Mikkel touched on. And in a sort of a theoretical sense, a ton of carbon is a ton of carbon is a ton of carbon. But of course, we know that in the carbon market arena, nature-based solutions arena, there's a lot more complexity and nuance to it. And I think that's where science really has a role to help understand that complexity, so we can understand how quality varies across different carbon credits. Some of the things that we can contribute. First of all, if you think of a landscape, how much carbon is there? Mm-hmm. That's a factor that science obviously plays a key role in. How much carbon could be there if you're imagining a landscape that's degraded? What's the potential carbon? So, how much additional carbon might you be able to pack into that landscape if properly managed, and so on? How does that carbon content change over time? All of these are things where science and scientists have to contribute to those answers. What are the threats to the carbon in that landscape? And the threats could come through things like fire, it can come through things like drought. And of course, those threats are influenced, they change over time, they're being influenced by climate change. And I'll just reflect on, so I'm from the United States, East Coast, Cape Cod. Any baseball fans, the New York Yankees had a baseball game in New York today against the Chicago White Sox that was canceled because of smoke that's coming from fires in Canada. Those fires are very much being influenced by climate change. So again, the threats to the permanence of carbon changes over time as climate change unfolds. And then you can think about the additional benefits beyond sort of the carbon related to biodiversity or water quality and quantity, temperature regulation, and so on, that all influence the quality of carbon, and also sort of the involvement, engagement of the local indigenous communities. So all of these many variables influence carbon quality, influence the quality of a carbon credit, and I think science obviously has a key role in helping to tease apart these complex relationships.
Great. And Jack, at Perennial, you're building a verification platform for soil-based carbon removals. As CEO and co-founder for Perennial, tell us, why did you choose soil? And how does technology actually improve the accuracy and the precision of verification? Explain to us, who is going to pay for all this technology and these capabilities?
Yeah, thank you. There's a lot there. So, we firmly believe that agricultural soils represent one of the largest and also the most immediate untapped opportunities to sequester carbon. So it's really about the how. One of the unique aspects of nature-based solutions, and specifically soil carbon, is that we don't need to build a lot of infrastructure. The technology to actually sequester carbon is just photosynthesis. And so, as the last panel talked about, what we really need is to figure out the financial incentives and market mechanisms and infrastructure to make sure that we can funnel corporate financing into the pockets of farmers who are actually making the change. And so that'll become more and more important. The other thing too is, agricultural soils used to be approximately 3% carbon, and now they're 1% carbon. So globally, that represents about $1 trillion deficit. So we're talking about big numbers in terms of soils potential here. And the mechanisms to actually perform that sequestration are known. So in terms of the measurement, measurement is becoming, more and more important. I think there's really two things that go into it. So variability and scalability. So today, the primary mechanism for measuring how much carbon content is in soil is walking into every field, collecting dirt, and sending it to a lab. So you can imagine that that's pretty archaic, especially when we're in the room with Bloomberg and their carbon buyers, wondering how we're going to measure soil carbon. So, when we dig into this a little bit more, when you look at a farm, it's actually pretty variable, even within a field, how much soil carbon levels there are. So when you're randomly sampling and sending it to a lab, you're not really getting a good understanding of how much carbon is in that soil. And you can imagine too, that at scale, it just is simply not cost effective to walk into every single farm globally every single year. So we need alternative solutions. And so what we've developed is a technology that uses the physical sampling on the ground, environmental data, and remote sensing to be able to measure soil carbon on every field, even when we don't have local physical samples. So the idea is to take a data-driven approach where you already understand where soil carbon levels are, then you can decide where to collect samples and how many samples, and significantly reduce those burdens over time. And in terms of who's going to pay, at the end of the day, it really will trickle down from the buyers. So in terms of the economics, one of the other benefits of nature-based solutions, especially within the soil carbon space, is that about 60 to 70% of the carbon credit value ends up going directly to the farmer. So when you think about the co-benefits, not only of sequestering carbon, but also the economic benefits of the majority of those credits going to farmers, there's a lot of benefit there. And then the remainder is shared by the developer and third parties, registries, et cetera. So the key there is that the majority goes to the farmer, but really at the end of the day, it's going to be the buyer who ends up paying for that MRV and the verification.
So the market today is highly fragmented with so many new players with groundbreaking technology and innovation to help improve carbon markets. Vaibhav, as partner at McKinsey, how do we know whether all these technologies are making a real difference in carbon markets? Is it all just fluff? Maybe give us some examples where you've seen technologies make a real difference.
Yeah, thanks for the question, Ashley. So I think we all need to contextualize this a bit, that carbon markets are still quite nascent, quite in the early days. And just as we would expect in any other market or industry, there will be technology that will come in the early days. Some of it will make a meaningful difference, some will not. And the same is happening with the carbon markets as well. We are seeing increasingly startups and technologies coming up which are genuinely trying to solve some parts of the problem of the value chain. I'll maybe touch upon a couple of them and the themes that some of the panelists already discussed. So maybe let me start with quality. which is where we are seeing a lot of technology coming in on MRV, on monetary reporting and verification, be it related with drones or satellites or even sensors and so on. Now, what that is doing is that it is improving the level of information that is available on many of these projects and making things a bit more accurate. Now, whether it has reached the maturity that we require, absolutely no. There's still a long way to go. But when you compare it with manual verification, it is much more efficient. It's much more fact-based. And that's one area where technology is starting to make a meaningful difference, right? The second area, I'll maybe, what Mikkel mentioned, exchanges are a beautiful example of that. In the absence of exchanges, when the trading was mostly happening over the counter, there was a lot of information ambiguity. And with exchanges coming in, standardizing products, doing some of these quality checks so that the buyers get more comfortable, helping with the, demand and supply matching. That's again an example where technology has helped in creating that transparency between the buyers and sellers. There are many other areas where technology is yet to mature though. An example of that would be technology-based removals, where there are increasingly companies and technologies looking into it, whether it's reached a level which is economic enough for the world to progress, probably not, right? And there's much more room to go further. But clearly there are many themes where technology is helping, and yes, helping in a meaningful way.
So Mikkel, you've just launched the CIX Spot Exchange Trading platform. So tell us, how is CIX then leveraging technology to build market confidence and bring liquidity to scale carbon markets? Do you think that the market is ready, or is it still too early?
So if I tackle that question in two parts, first about the technology and then the readiness. I know the real answer, the right answer here is to say three buzzwords like blockchain, satellite, and artificial intelligence. The reality is that what this market right now is probably a little bit more basic. So we have three platforms, and rather than just talking about the exchange, I'll talk a little bit about how technology can help build trust in the different platforms. So when we're talking about a marketplace, the buyers here are corporates, and the main thing they want to understand is, what am I buying? So where technology helps here is to give them accurate information about the many attributes that exist. Where is the forest located? How much does it protect? How effective is this? And simple visual maps can help in that point of view. Not very savvy, but it really helps the buyer understand what it is they're buying. When we're looking at an auction, the main thing to ensure is that the price is right. So here the trust comes from technology that makes sure that we can accurately price these things, and we can give that information to a broad audience so that they can bid in an auction. Again, not very fancy, but quite essential to this market. The third element is the exchange, and this is where we try and provide trust in a different way, which is from execution. Here you want to make sure that everything is connected to each other so that you don't have these issues of double selling. If I buy something and I retire it, it is actually gone from the system. But I want to make just one last point, which is we also pay part of a bigger ecosystem here in Singapore, together with partners like GenZero. And here we get a lot of people coming to us and ask the question of, what can I do to reduce the cost of building this project? And in reality, and I think I said this on an earlier panel today, the price of creating a good project with the prices today is about 5 to 6 times, I hope it was consistent, the value of the carbon credits today. So any technology that can lower that cost will really, really help. And I was really encouraged earlier this year, the SEEN Coalition, which is a group of 8 NGOs, came together with a relatively simple diagnostic tool that allowed project developers to actually figure out, is there carbon value in these types of things? And finally, is the market ready? Well, we're certainly ready for transparency. I think we're also ready to a level of liquidity that is ultimately the only way we're going to get this to scale. We are not a very mature market. Sometimes it takes 7 to 9 years to make these things mature, but we got to start somewhere. And if we don't create that liquidity pools now, and we're really never going to get capital to move. So let's not wait for things to be perfect before we take action.
Great. So in theory, climate science and research can help us develop the right science-based solutions for carbon markets. But in practice, do companies and policymakers really believe in the science? And Max, since you're the scientist here, maybe give us some examples, right? How has this really been implemented on the ground?
Yeah, so are people listening to the science? So, as a scientist, we've been yelling about this for decades now, maybe 40 years. I don't go back 40 years in this, but certainly over 20. And for most of that time, it did sort of feel like nobody was listening. Changes weren't being made. It's incredibly exciting now that the world is listening. I mean, sitting here in this with a bunch of people in the financial community, that wouldn't have happened 10 years ago. The net zero pledges that are just taken off show that the world's listening. I think a lot of that, people are finally listening to what scientists have been saying. The Paris Agreement was absolutely instrumental in driving these changes. And another big part of it, I think, is that climate change has sort of shifted from being this theoretical thing that scientists talk about out there somewhere in the future to it being here right now, and people are seeing it in their day-to-day lives and and recognizing that something needs to be done if we're going to have the future that we all want to have. One of the ways that we at the Woodwell Research Center are trying to contribute to helping carbon markets work for the things that we care about, climate, people, and nature, is sort of taking a global view and pulling together tens of different global data sets that provide information that can help determine quality of potential carbon credits. So some of the things I mentioned earlier, carbon content, potential for putting more carbon into the landscape, risks to permanence, and so on, co-benefits, and pulling all this together, globally consistent data sets where you can essentially develop an index or a series of indices that will help, we think, both on the supply and demand side. It will help buyers or investors figure out where they might want to put their money, where some potential good projects are, and I think it will also help on the supply side, because landowners, the people who are actually controlling what happens on the land, I think in many cases don't understand the value that they could potentially derive from participating in the carbon market. And so what are they going to do? They're going to do what they've always done. If you're a small scale farmer in the Amazon and you know that you're trying to feed your family and raise a couple of head of cattle per year, and you can do that by, after the pasture productivity declines, you clear a couple more hectares of forest, and that's worked in the past, you're going to continue doing that. But if you know that, hey, you can derive revenue from participating in the carbon market, you can use that maybe to help boost the productivity of the pasture you have, that's hopefully going to steer people in the other direction.
Just on that, how is that small-scale farmer going to know and understand all the data and all the science stuff, right, that you have? Because
it takes a massive outreach effort, and we have to do it. Just some kind of mind-boggling statistics. So again, we work a lot. We work globally, but certainly in some of the big rainforest areas, Congo, the Amazon, and so on. And as we saw in I think the previous panel, a main driver, or maybe earlier panel, of deforestation in many locations is agriculture. Much of that is for grazing. Certainly in the Amazon, producing beef is one of the big drivers of deforestation. There are massive sort of multinational companies that are the meat packers, but they're not the ones raising the cattle. It's thousands and thousands of small-scale farmers. I think JBS is one of the big meat packers in the Amazon. They buy cattle from something like 82,000 different farmers. So yeah, you're asking the right question. How do you get that information to all of those farmers that are producing the cattle? In part, I think you work with those companies that are actually purchasing the cattle, but yeah, it's a massive kind of an outreach effort. But there's no alternative. It has to happen if we want to keep the tree standing.
Okay, so Jack, given the nascency of the sector, we've heard it, right? How can you really tell that remote sensing and AI is accurate and reliable? And are the standard bodies like Vera or Gold Standard accepting the latest technology in their programs?
Yeah, thanks, Ashley. So in theory, it's simple. You just compare the model results to a known set and look at statistics. But that's not how it happens in practice. I think one of the things that's more of a call for action is one of the difficulties. We're one of hundreds of companies that are developing new MRV technologies for the carbon markets. And so one of the difficulties that we face is there aren't clear pathways, benchmarks, and also data sets that we can work through processes to demonstrate the validity of technology. So we do work closely with the registries, including David's team, on developing tools that allow new technologies to be included in existing methodologies, but they're all bespoke processes, which is really difficult to replicate. And so, for example, as Max was saying, it would be very helpful to have a data set that the entire industry could test their models against so that you can compare the different models. This is something that NASA Harvest is working on, and they've done a great job of organizing this within the nature-based space, but it's probably 5+ years off. So it just takes a long time to test technologies like these. I will say, some of the compliance markets have done a good job of this. So we've talked about Australia in earlier panels. So the Australian Clean Energy Regulator has the world's most advanced soil carbon protocol, and it includes remote sensing and AI models within that protocol. So we can actually apply Perennial's technology today to generate ACCUs. In the voluntary carbon markets, like I said, we're there. We started those processes with Vera, with some of the other registries a few years ago. It just takes time to not only demonstrate the validity of the technology, but also make sure that the industry and carbon buyers are caught up, because it's not just about the methodologies at the end of the day. I think especially with the litigation that's occurring with carbon buyers, it will become more and more important to independently demonstrate the actual technology and the measurement capabilities. And I think it'll link to exchanges like CIX.
Great. So maybe now's a good time to take some questions from the audience. And I think we have one here on standards. Multiple standards for carbon verification is perhaps one reason for voluntary market to remain a bilateral transactional market. Will a single standard help the market better? Anyone wants to take this, or should Vaibhav, would you like to have a go?
Sure, I'll have a go, and would love to hear from other panelists as well. So, theoretically, a single standard will absolutely help, right? It will mean that all countries, every government is on the same page. The reality is that to get there will be a very long path. We are still in a world where the standards are being, the multiple different standards, all of them are being refined to, reflect for some of the gaps or leakages that the world is finding as the market becomes more mature, right? So it will take a long time for us to get to a stage where there is one harmonized standard. In my opinion, we can't keep waiting for that. We still need to continue moving forward. But as long as, even if there are multiple standards, but they're moving in the right direction to make the quality controls better, to make things more harmonized, we are definitely going in the right direction.
Maybe next question on prices then, since Mikkel, you touched a little bit on that earlier. When will carbon credit prices recover, and what will it take? Best predictions.
That's a very, very large question. So first of all, before we get too depressed, it is true that the benchmarks that we look at today, which suggest the carbon prices are very low, and no doubt they're too low. But there's also an enormous amount of premium these days for quality. And I think I said earlier on today that premium can be 2, 3, 4 times the price of a standardized product. And by that, I mean the average credit on the street right now. So this dumping in price is not universal. What do we take to recover it? For me, it's quite simple. First of all, we need to rebuild the trust, and I talk quite a bit about what it takes. Above and beyond that, I truly believe we need the right incentives. And when we have the right incentive, it comes from the integration of the compliance in the voluntary market. We've got to do what Singapore did to make these markets come together. So there is yet another reason for people to buy carbon credit. It's just a natural price setting level of whatever it is. In Singapore, 25, moving for $40. In some countries is quite a bit higher than that. And then finally, we got to give corporates some other incentives to do this, which could be, for example, involved in the ESG rating. So I think some of these things will come if we build the trust, then naturally countries will be more willing to actually integrate them into their national systems. And once we have that, we will have a market that is much more global and has a much clearer price signal.
Anyone else wants to?
I think to add to what Mikkel already mentioned, I think this harmonization of compliance and voluntary markets is very important. And as I discuss this with many of my clients, one question on top of mind for everyone is, if we do buy credits, would these count towards my regulatory requirements, right? And unlike Singapore, many other countries in the region are yet to come up with that clarity. And as long as there is this ambiguity, there is always a reluctance from the buyer side as well, right? So I think the harmonization will be a very important factor, and hopefully with Singapore setting that standard already, rest of the countries will also come up with that soon. I think the other part is also on quality, which we have discussed often, right? I think the confidence on quality, it will be a gradual journey. There will be, instances where quality comes under question, but as long as we are making the right fixes to move forward and get the quality up and up, I think that's the second most important thing that will be required.
Just following up on one of the points Mikkel mentioned very briefly, there's an idea going on right now of creating some sort of equivalence ratio. So one of the problems with pricing in the voluntary carbon markets is, one, there is absolutely no transparency right now, and some of the people in the room are trying to solve that. But it would be very helpful to everyone to be able to understand the supplies and prices at which carbon offsets at different qualities were sold. But two, a lot of the buyers of carbon offsets today have made massive investments in science and technology teams to be able to understand what those qualities are. And so for the VCM to grow, we also need to create financial mechanisms, and the equivalence ratio is one idea, to allow buyers who aren't sophisticated to still be able to purchase credits at some sort of standardized price point, where we can isolate them from some of the complexities when it comes to the 50 plus layers that go into actually pricing a credit.
We have a question also in terms of scaling MRV technologies, right? What are some of the key issues faced when trying to scale MRV technologies in nascent areas such as soil? But I'd like to keep it more general as well, right? Apart from soil, I think related to price as well, how do we sort of scale the market with the cost of technology, and also help to boost sort of confidence in pricing of quality, right? Because there's sometimes a little bit of the trade-off as well. Views by the panelists?
I'll start and then hand it to Jack, perhaps. They mentioned soil. So, at the Woodwell Climate Research Center, we focus on the trees and the soils. The trees are relatively easy, not to say it's easy, but you can see them with satellites. So, we can have global coverage satellites looking at the trees and figure out the biomass and the carbon content. Soils are a lot trickier. And I'll let Jack speak to it, but I'm excited about the approach that they're taking, and it seems to hold a lot of promise for being able to figure out carbon content of the soils using satellite and other approaches. And if they really get that, that's a really big one.
Yeah, I mean, to riff off of that, I think one solution is collaboration. So Max and I didn't know each other before the panel, and I've talked quite frequently actually ahead of the panel. And I think that the opportunity for scientists, carbon buyers, suppliers, and the MRV companies to actually work together in harmony, it will allow for a lot of the curtains to come down and for trust to be created. You see a lot of suppliers actually going in and developing projects themselves. Shell does this quite a lot with soil carbon projects. I'd say in short, the hurdles that MRV companies face is one, access to data. So the model's ability to go to new geographies and increase performance is directly correlated to the amount of data that you can feed to them. And for a venture-backed company like ourselves, we don't want to spend all of the money on data collection. And GenZero definitely doesn't want us to spend all that money on data collection. So one is just kind of access to data, which is tied to the collaboration aspect because the data is out there. It's just kind of locked away. Everyone keeps it very private. We do as well, but if everyone shared a little bit more data, we'd be able to move a lot quicker. Two, as I mentioned, is more collaboration and standardization with the registries and different standards bodies to make it just clear channels of communication in terms of here's the benchmarks and the processes that you have to go through to demonstrate the validity of the technology. Those are the two that come to mind.
And maybe a slightly tangential point, as good as any point in time, to congratulate Vera and David for and really showing that these things are being taken serious now, because I'm a strong proponent. We've got to make it cheaper, simpler to get things to market. But it's good to see, like with the new consolidated Vera standards, that now there's actually buffers for inaccuracy around data and for the science that comes into it. It sends a sign that it's worthwhile going the extra step, getting the MRV right. Because one of the things I think is always a challenge here is for every single time I choose to take a shortcut on anything, my baselines and how much monitoring I do, I may be able to save a little bit of money and create a little bit more credits. And unless there's a compensation on the other end that I get a higher premium or a bigger stick if I don't do it, then forever there is this difficult situation. So if we want to race to the top, we really need standards like that. So good work.
Okay, so last question for me, for all of you. Is there hope for carbon markets? And maybe if you could change one thing, and you can't have the same answers from the other panelists, right? What will that one thing be?
Okay. You get to start, so we can think.
In a situation like this, it's good to go first. Like
I looked at you.
So look, my view is there has to be a future for carbon markets. I think it's important to realize that even if the world pursues all the possible themes and levers we have at our disposal, there will still be residual emissions for which we'll need offsets of some kind. And if we don't have a well-functioning carbon market, trading those offsets will become a nightmare. Now, whether the markets today are mature and harmonized enough, I think everyone believes not yet, but heading in the right direction, right? And that's where we need to continue down this path. The one area where I would say which would move the needle in a meaningful way would be this regulatory and policy clarity, particularly on the harmonization of the voluntary and compliance market. Okay. I think just like Singapore has come up with that clarity of 5% allowable credits by 2030, if remaining countries also come up with that kind of clarity, it will help. Similarly, even on inter-country trade, the Article 6 that was signed, the operationalization of that is still being determined, right? So as we get that clarity, I think the regulatory and clarity that will help us in the right direction.
Clarity of policy. Next, anyone?
Yeah, I guess I'll use the word momentum. So, the last panel touched on this, but I think it's clear that nature-based solutions and the voluntary carbon markets will continue to grow. The question is kind of, will it take 5, 10, 15 years for there to be clarity and scale that is meaningful to financial institutions? One thing that I would like to see, especially as a developer, is we do need to be extremely careful about quality and period. But at the same time, I think that we need to be cautious about some of the rhetoric that's been thrown around, especially in the news lately, that de-incentivizes good intentions in terms of investing in the voluntary carbon markets. With a lot of the lawsuits that have happened recently, I think that for sure, corporates have some corporates. Actually, one of the largest 5 historical buyers of carbon offsets is going to stop purchasing carbon offsets. I can't remember whether or not it's announced, but it's just too much legal risk right now and financial risk. So I think we need to make sure that the corporates who have really made investments in their teams and off their balance sheets to in one way, invest in, carbon credits that we keep that momentum going.
I'm going to turn your question around a little bit and ask, is there hope for protecting the world's forests? And that's absolutely essential for protecting our climate. That's absolutely essential for biodiversity. It's essential for the people that live and rely upon those forests. These are issues that we've been working on for decades, and I'll say that I have more hope that we'll be able to accomplish those goals together now than I ever have, and it's because of the potential for carbon markets to catalyze that protection. They're not working like they could. The potential's there, and that gives me great hope. And that makes me thank all of you on stage, and many of you are out there for dedicating yourselves to trying to make those markets work for these things we all care about and need.
Mikkel?
I'm sure there's a million technically very clever answers to this question. Mine is quite simple. I think we simply need to change the misperception of what carbon credits actually do and stop thinking that this is a last resort solution and to a simple thing of what it is. It's a partnership between somebody who's tried to decarbonize and can't do anything further to another one who has the means to actually make that actions. As soon as we start to believe in that, really believe in it, I think that everything else starts to change in terms of how we think about what carbon credits can do. And that's going to be the start of an unlock, and then all the brilliant, clever technical things can come.
Thank you very much. On that note, please join me in thanking our panelists for such a wonderful session.